And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Thursday afternoon. I hope you all had a great trading week so far. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and check out the Elliott Wave Principle. You can read this wonderful book for free online when you use the link in the description down below. And you can use the same link or a second link down there to get yourself a physical copy. Now, with all of that out of the way, as usual, let's jump into my portfolio. We can see we have another slightly break-even start into the day. So portfolio is unchanged, 600 GameStop shares, 300 NEO shares, 50 immersion shares. And against the GameStop and NEO shares, we're writing covered calls to earn premium. So for us, the most important thing is to always check, can we roll our options for a decent credit, or should we just keep them the way it is right now? And obviously how the price in those three assets develops. Now, starting off with GameStop as usual, since it's our bigger position, it's unchanged. We're on an 8-hour chart, and we basically assume that very likely we finished our corrective wave 4 down here and are now seeing the beginning of wave 5. That also will then subdivide into 1, 2, 3, 4, 5, of course, which means there are days or periods where it will go down a little bit, but as long as we stay above 2156, we can still operate under the assumption that wave 4 is potentially over and that we're now in an impulsive wave upwards. That said, overall, the whole pattern would become invalid if we break 2030 to the bottom. So then this part of the pattern would become invalid as well. But from the looks of it, so far, so good. So we'll just have to wait a couple days or weeks to basically have a little bit of additional confirmation that we would get technically if or when we break the low at 2447. So once we breach that level here, we have an additional confirmation. Actually going to add a horizontal line here, but so once we breach through here, we have additional confirmation that we most likely are indeed now in our 5th or next impulsive wave. Our options expire here at this strike price, so as long as the price stays below this line, by this time the options would expire worthless, and we would obviously keep our shares and be able to write new calls or new covered calls. And on the way there, we can obviously check, like we will do in a minute once the markets are open, or in 1.5, if it's worth rolling our options further out or not. So the more the stock moves upwards, the higher the premium gets. On one hand, the higher the premium gets that we have to pay to close out our existing covered calls, whereas on the other hand, the higher the premium gets that we receive for writing new, longer dated covered calls. So we'll have to just wait and see. NEO, similar situation. NEO, GameStop actually apparently reports earnings in a couple of days from what I saw in the pop-ups earlier. And NEO reports their earnings either today or tomorrow, according to the pop-ups in Interactive Broker, if I didn't misread anything of that. Not that it matters for our trading strategy, but it would be interesting to see. Overall, as I said, we believe that the correction is now finally finished and that from here on out, we actually will go up. We have covered calls written against our shares, so that at the 650 strike price, and that basically expire on April 25th, so a little bit more than a month from now. We'll just have to wait and see. Even with bad earnings, so as long as we stay above the 401 level here, we can still operate under the assumption that we are right now in the next impulsive wave up. Hard stop loss in quotes would be at 363, where we would then, where simply our entire, even though it's not a very, very big labeling or so pattern or big pattern, but where everything we have here becomes invalid, and we would just take our loss on that position. Yesterday was quite a green day. Today we see that almost the entire bar on the side is at least slightly red or red. We'll see how that turns out later. Immersion, as said, we're waiting. We're expecting a further push down to the 61.8 retracement, and where we would buy another 50 shares to basically get a full 100 shares, and then also start writing covered calls against those. And that's pretty much our entire stock portfolio right now, with obviously GameStop being the by far biggest position, 10 times as big as NEO, and NEO in return is roughly 10 times as big as the position that we have, or not 10 times as big, but much bigger. So you can see the market value 5 times as big or 4 times as big as our immersion position. Yeah. With that out of the way, if we look towards crypto, there also everything seems to be slightly red today. We're again waiting to see if Bitcoin actually is in a retracing wave up here right now. If so, we would at some point implement a trailing stop loss to ideally get out of our position. If not, if it doesn't trace up that high, if we go down further, we'll just hold this to the bitter end. It's not a big position, and I long-term believe there's still more upside. Yeah, it's going to be similar in most of the other cryptocurrencies. You can feel free to check out yesterday's episode of Daily Market Mastery for a little bit more detail about the different cryptos that we look at. So XYO, XRP, Storage, HNT, Bitcoin, and Algorand. For the purpose of this stream, so what's interesting, SMCI green, surprisingly. So here I'm waiting for further downward movement. Not sure if we will get a chart today. Yesterday it worked, so sorry guys, really don't know why always for the trading stream I'm still a little sleepy, or getting sleepy depending how you look at it. Well, if we don't get a chart, it's not the end of the world. We don't hold a horse in that race. What would be interesting to label would maybe be the Nasdaq, although we would have to start from a bigger picture position here. In the meantime, while maybe a chart is loading, we can check our options. So at GameStop, we have the April 17th covered calls at 35 that we would have to buy back, and in return we could then go to April 25th, since May 2nd doesn't offer the 35 strike price, and sell those. We see that as so often, or actually less than usual, we would only get a $6 credit, which definitely is not worth it. So if we roll them further out, then as said, we have the problem that May 2nd doesn't offer the $35 strike price. Or maybe it's just hidden, but they should all be visible. Yeah, they are all enabled. So, and the next option would then be basically right now May 16th. So we are still waiting for the options for May 9th to be added, so that we can consider that. But that would already go beyond 45 days, which is, we don't want to necessarily exceed that. Obviously, if we roll them down on the other hand, so if we roll, for example, down to the $30 strike price, we could pocket some premium, but it's also not much considering what we give up on the other hand. Let's look at GameStop. So that would be the April 25th. So that would mean we basically add a couple of days. So we would end up here with the expiration, and with 30 we would end up here, and that's like not as far away as I would like to have it, especially considering the, in quotes, little premium that we earn or would earn. So we are going to keep our safe distance and probably not roll those. And as for NEO, in NEO we have actually potentially a good situation to roll them. So we have the April 25th 650 calls that we have to buy back, and on the other hand we could go for May 2nd, and there is unfortunately no volume on May 2nd, and if we go to May 16th we go further than we want. So, and if we do that, yeah, we're not gonna do that for a $4 credit. So, and on the other hand, if we do it like this, it's also not worth for $45. $45 would be like 9 shares. Not that tempting. I'm curious how the leaps are valued here. Yeah, doesn't really. I mean, it is a decent return if you think about it. So, although that's for a little longer. So here, if we look for basically less than a year, if you sell the $5 calls, you get $120 in premium, which basically equals a little bit more than 20% return on your investment. So if we buy 100 shares of NEO right now, they would cost us $485. And then if you write the $5 covered call, you have that small $15 profit margin, but on top of that, you would get $122, $23 in premium, which is a 20% return, which also reduces, which basically reduces the cost of your options. However, from a tax perspective, I mean, you obviously have the risk that if NEO doesn't go higher, then well, you still reduce your loss, because while you paid 485 or 486 for the 100 shares, technically, because you got the premium back, you actually only paid 300 something. So it could drop by $1 or $1.20 to get to a break-even point for you. However, depending on where you live, I'm not an accountant, so consult professionals. But depending on where you live, you actually are in the situation that potentially you have to. So the premium that you receive now, you have to pay taxes in this tax year, whereas potential profits from the shares fall into next year. So yeah, that's worth considering here. Yeah. So on the other hand, I'm curious for GameStop if we look shorter. So okay, yeah. So there, if we look a year out, for example, selling the $20 cash secured puts, or even buying right now when the price is around $24.50, so you need $2,450 for 100 shares. Whereas if you then write the $25 covered call, you get around 650, so around 2,450. So yeah, so 25% roughly in return for the year. Obviously, if GameStop goes up, you miss out on extra profit. If GameStop goes down, it could go down to around 18.20 to reach your break-even point, in quotes, where the premium you earned doesn't compensate anymore for the loss in value through the shares. But yeah, so that's that. So I'm gonna not change our option position. We're gonna not check the Nasdaq now. Or no, we switched back here to GameStop. We still wanted to have a chart here for this. And question is, that's 24. Yeah, let's label this mess. Where are you having your... Yeah, I don't think it's like this. So the question is, do we have our wave 3 here already? Oh, let's use Kennedy channeling technique. Yeah, that's where we have it. So, oops. Where's the cursor thingy there? Cursor select. Yeah. So if this is our base channel, then we have our breakout, and then we do the following. We take our 0.2 and, oh no, we take our 0.1, sorry, and basically do like this. And that actually confirms, in quotes, Kennedy channeling technique, a wave 4. Then we do like this, which would indicate then a wave 5. And then we can do like this to get our 5th wave target area. Ba-boom, ba-boom. Yeah, which we grind along here. So I think the most likely scenario right now would be to label this as, or not most likely, but based on Kennedy channeling technique, would be to label this as 1, 2, 3, 4, and then 5 being here. And if we use our usual methods, we can also see that this way The wave 3 bounces at the 261.8 extension of wave 1, which not always, but very often is the exact target area for the third wave. And as for the target areas, there we might probably exceed the regular target area by a decent margin. Yeah, so that would be our fifth wave usual target area. And there's another one at 161.8. That's, however, beyond. Yeah, so we don't need that one. So technically we can get rid of this and this and this. Yeah, so that would be how I'd personally label that, which means we would be retracing right now this entire move. And then here, that doesn't work as a flat, just to clarify. How would I have to? There would need a retracement. And would theoretically work. Annoying. So consulting the book, moving the coffee aside. So we're actually consulting our cheat sheet first. So in a flat correction, wave B is smaller than 2 times wave A that we have. So, and if we look more detailed, so guidelines on waves. A flat always subdivides into 3 waves. Wave A is never a triangle. Wave A would be in that assumption. So that assumption would be that wave 5 technically finished here, and that this here would be wave A down. Wave A is never a triangle. This is not a triangle. Wave C is always an impulse or diagonal. That would already be 1, 2, 3, 4, could be a turn into a diagonal. Wave B always retraces at least 90%. So we're going to try to visualize that part real quick. So by adding a retracement and just adding the levels the book suggests. So 90% is one of the levels, and the other ones we can remove for now. And guidelines, wave B usually traces between 100 and 138. 138. Okay, so that's for wave B. So that technically fits. So we're retracing almost 138, but that's still within the, yeah, like within the bill. Wave C is usually between 100 and 165. So that would be, if we mean A, B, and then C, not this one. C would be 100 to 165. And it usually ends beyond wave A. That actually would fit in terms of also getting us to the 38.2 retracement. So I'm not saying that we are having a flat here, but from the first, which is confirming when wave B is more than 105% as long as wave A, and wave C, yeah, then it's called an expanded flat. Yeah. Okay, that's all about there for flats. Now, as for the subdivision, so wave A is never a triangle, yeah. A flat subdivides into, according to our one-page cheat sheet, correction, and impulse, yeah. So, although that's tricky to do here, so while technically, if we just look at this area, it fits the, so without considering if wave 5 is sufficient here, yeah, but it fits the bill for a flat correction so far. Although we would need to have a corrective pattern in here, which I'm not sure if we'll find one. So, because this looks more like it is impulsive. So, although it could be 1, 2, 3, 4, 5, A, B, C, and then there would need to be another 5 waves down. However, then this is not a 3-wave move, but this is more like 1, 2, 3, 4, and 5. 5 could also have the orthodox end here. that's worth, no, because then 4, no, yeah, 5 should end here, yeah. And then we have 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. So all it says with C would be an impulse, yeah. So while technically, if we can label this as a correction and another corrective move, then we now would get a 5-wave impulse that would bring us down into this area here, 18,000, yeah. However, let's not do that right now. So let's assume that this is actually our end of wave 5. It doesn't change much because at the end of the day, we still then get an impulse, and that impulse would actually be like this starting point, our point 2, our point 1, extend that. And then the next thing we do is basically wait for our point 4. So by taking the high point that we have right now with the point 1 and a parallel through our point 2, and we technically are waiting for a breakout of this channel. Now we might not get it here in this case, yeah, because considering the width that we have here and the sharp retracement. Additionally, if we add an extension here, so for our perceived or assumed wave 1, we very often would expect a set our wave 3 to turn around at the 261, 238% extensions of wave 1, which isn't the case here. So that's worth to considering. So we can focus on trying to label this downwards part, but for that we'll have to look closer. So okay, hourly is probably too much right now. So let's wait for it to finish loading. And maybe 4-hour chart. So technically we would do the same thing here, just on a smaller scale. So whatever high point we have here with the next low point would potentially be our wave 1. And then we can already see we bounce here at the 361, we bounce around the 460. So it's going to be tricky to pick. So we're going to give the auto labeling a chance to do its magic, and it would suggest that it actually looks like this. So 1, 2. Yeah, I'm not sure if I'm a fan of this labeling, especially because here this doesn't make much sense and would actually subdivide into a diagonal, which cannot be the case. But if this here is 1, 2, and then here we have some 1, 2, 3, 4, 5, then that actually would check out. And then we would now, it's a little bit confusing to do, to be honest, but we would now actually expect that we right now are retracing this move and would therefore expect a little bit more upside to reach the 38.2. Although one of the levels, although the least likely one in my experience, is the 21.4%, and we can see we're already around that one. Yeah? So, but we're going to hide that one for now. So overall, we would expect that this might be then, I don't know, can it be? That's ABC, but then here it's also ABC, here it's also ABC, ABC, 1, 2, so A, B, C. So this might be a combination of corrective patterns. So the challenging part in Elliott Wave Theory or the Elliott Wave Principle is not necessarily spotting the 5 waves move. The challenging part is actually labeling the corrections, because there are so many variations of them and combinations that's where you can get it wrong. And sometimes you might just see what you want to see instead of what's really there. Overall, so the point would be that we right now assume that we actually have wave 1, wave 2, and then wave 3 would actually then probably take us even till further, yeah. So because here this first wave is obviously not the end of that whole measure. Unless, no, I don't see, we're retracing quite a lot here. So if we're just retracing this move, it feels like we're already retracing too much or not, or are we exactly bouncing at the 61.8? Yeah, tempting. Yeah, so as you can see, we are exactly bouncing at 61.8 is 19,134, and the low that we have here is at 19,145. So we're on the spot which could indicate, I'm not saying that it does, but it could indicate that for that we have to zoom out a little bit and actually get rid of this one for now. So if we zoom back out, daily chart, so that instead of retracing this entire move, that we are actually only retracing this part here right now and are still getting another push further up. But then this last part here would need to be a diagonal. So that would then mean that the Swift 5 is unfinished potentially. But for that fifth wave to be unfinished, I mean, we saw that there's still room up in the target areas for that fifth wave. It's a tricky choice, yeah. So it really comes down to dealer's choice. They're the flexibility. So because obviously patterns are not always super nice to label. I mean, to be fair, we had a similar drop here. Yeah. Then we get this. So maybe it's not this part here, but that wouldn't change. That would just mean that wave 5 gets its orthodox end here. And then we have 1, 2, 3, 4, 5 here. And then the question would be 1, 2, 3. That cannot be because then we have a diagonal and wave 3 is not the longest or not. Yeah, it's the shortest wave. If it's 1, 2, 3, 4, then the fifth wave that we're still about to get here cannot be longer than this. Yeah. So it's really a tough choice, to be honest. Yeah. So it's especially tricky because I don't have a horse in the race. So I don't have to come to a conclusion and risk my money on it. Yeah. Okay, let's approach this from the very, okay, there we don't have very much history, yeah. So we pretty much have our low here on the monthly chart. We have this retracement here. We don't have any more historical data that goes further back. Just a little bit of a pity, actually. Yeah, because there's obviously way more history that would be useful for labeling, but and if we just focus here, Kennedy channeling technique would technically suggest that we already we're in our target area here. So again, if we add our destination channel by connecting point 2, point 4, or what we believe to be point 2, point 4, extending it and adding the median, then wave 5 will very often touch the median or the top of the channel. Now we didn't touch the top, but we clearly lost steam here, so it got that the development got flatter and then with the correction. So well, on one hand, if we would be able to label this as a correction and this is a corrective pattern, then this could be a flat and we are on our way down here. On the other hand, then we would also technically still be able to, we would actually reach our 100% target almost perfectly. So, but then we would expect an impulsive wave down, yeah. And the only thing that kind of like speaks against it right now is the maybe coincidence, yeah, although I don't like coincidences, that this move here could be A, B, and C, where wave C is a very sharp movement, and that exactly reaches us at the 61.8% retracement level. So you can see 61.8% retracement level. It's like plus minus 6 points on the dot, which considering the number, it's an incredible turnaround point. And we didn't bounce at 38 point, or we bounced at some point at 38.2, but only briefly. Although also for a couple 100 points, we didn't bounce on 50%, yeah. Overall, I would tend to let my personal opinion of the nonsense happening in the White House get in the way and say, okay, we should go down from here. But I shouldn't let that interfere with my analysis. So it's, yeah. What's the verdict? Yeah, long story short, if this would be an impulse, we still would expect, I mean, we would either have to go here and then we're in diagonal territory, or we still would have to expect further downward movement to basically get this curve here steeper, although it doesn't change much because we always have to adjust it for wave 2, get another retracement. So I think I would stay out of it right now. I mean, I anyway don't have a horse in the race, but considering just how exactly we turn around at the 61.8 retracement, there is a decent argument to be made that this is the corrective pattern A, B, C. In this case, if we check, so A, and then add the 161.5, 161.8, and the other one was 165. That doesn't make a huge difference. Yeah, we kind of exceed our target area for a corrective wave, but I had that already burn me in the past, so we only exceeded by little. So it's still, it really, I'm not a fan. Yeah, so we'll get rid of this for now, and we actually get rid of our wave 5 labeling for now. And we get rid of this for now, and for now we just keep the labeling on the chart that assumes that we are actually having a spot landing here on the 61.8 retracement. It would be easier if we would have a very, very clear 5 waves in here, although it could be 1, 2, 3, 4, 5. But it just doesn't look too nice. So if we label this, yeah, so auto labeling would also suggest that it's not a super nice pattern like this. Yeah, but it fits the rules on first glance. So, and now we have a correction, and that correction retraces 61.8% almost on the dot. And then from that, we get another 5 waves up. So we'll have to keep an eye on it. If we were to break the previous all-time high, even though then we might from there correct a little bit again or so, I probably would consider going long, because then there should be more room still. And considering the chart we're looking at, we're talking about at least the room for another 1,000 points or so, which can be decent profit already. Although it would then be the question, where does the stop loss go, or can we do it with options? Considering we're looking at a 3-day chart, this here took from August to February, so 4 months. From what's that? 2,000 points in. Let's check. Okay, so option strat. Link to that is also in the down below. So let's say 22,000. Or wait, NDX is, yeah. So, and we say in 4 months. So that would be 4 months would be basically, for example, July. Yeah, there is no, I mean, what was it? What's the other one? XND, yeah. So XND. And then we'll say 200. Yeah, the risk reward ratio there is abysmal. So let's double check. If we look at the XND, so it's at 196. I would say it should go till not 22, but actually 22 would be here, 23, so 235, yeah, so roughly 235. So it's also not such a tempting curve, especially we can see that within a couple of days or so, if the price doesn't start to move up, we actually start to yeah, like go closer or get our loss. And at the end we would have to reach at least 218 for break even. If we say 225, then it just changes the risk reward ratio. Can also go for max chance, we can see, but it just changes the trades to not be that good. And a coin flip is not really worth making the trade. So, okay. Yeah, I guess we'll leave it at that. So while the bigger pattern or my personal bias would actually suggest that we're going further down, whereas just focusing on this short-term area, we have a few points that should suggest that we actually are going up from here. I don't know how, but it's just suggesting it that basically, yeah, we would have to have a set. This here is the 5 waves up, and then this here is our 3 waves down, and then basically the whole thing. I mean, I don't know what the previous waves then are, so that would be then, yeah, if this here is then 1, 2, but that cannot be wave 3, but it would need to be a subwave, yeah, so it's like really, in the bigger picture, it's hard to fit it in, but in the smaller picture, it looks like from here we might actually get to see. Maybe if we zoom in and focus just on the latest area. But this visually looks, on first glance, three waves. But here we have 5 waves, 1, 2, 3, 4, 5. Yeah, so here we also have a potential diagonal or so of some kind. So 1, 2, 3, 4. No, it could be an impulse. Yeah, no, 1, 2, 3. Although we go very low here, but still 1, 2, 3, 4. Truncated 5th wave maybe, or like here. So one might potentially go long right now and basically keep the stop loss at, yeah, we can see that that would be roughly the level. So it's like 100 points. The auto labeling, I'm not sure I agree with it. So I have a trouble to see a 5 wave impulse here. So although if this is a diagonal, so although in a leading diagonal, it would need to be an impulse. If it's ending diagonal, then it could only exist as wave 5. That could, however, be the case, and then it would subdivide into a lot of 3 waves patterns. So it would subdivide into tools, Elliott Wave ending diagonal. Yeah, so it would subdivide like this. Although that would be in relation to previous waves, this would be way too small, so it doesn't make sense. So, and then this would need to be 1, 2. Yeah, this is an impulsive wave, yeah. So there the whole thing falls apart because we also would need to have a corrective pattern in here unless this is somehow ABC, X, ABC. But then this point doesn't get lower. This is 55, 450, and this here is 51. Yeah, so this one is lower than this one. So the beginning here is the issue, to be honest. So that makes it a challenge to label because this here doesn't necessarily look like a nice 5 wave move. Here we have a nice 5 wave move. Here we have what could be a 5 wave move. And then here we probably have the next 5 wave move. So there are a few things that point upwards, but yeah, like, so if we zoom out, we're going to stick with the labeling for now that we say, okay, despite my personal bias, we assume that right now we actually hit the bottom and we were only correcting the smaller movement here and are now actually on our way further up. We'll keep an eye on it. If there becomes if we get a clearer picture, I might trade that movement. But for now, considering my personal bias, I rather stay out of it. Yeah. Anyway, for us, what matters the most is obviously our movements in GameStop, where we are long-term bullish, and followed by that, the movements in NEO, where currently we see a little bit of a retracement. If there are the, let's see if they're still there, the bot notifications. No. So where earnings should be due tomorrow or so, and then depending on the earnings results, we might get a push up, which then gets us closer to being right and getting this position done in profit, or a push down, which would then point out that we might be wrong and gets us closer to maybe closing that position at a small loss. Yeah, the Nasdaq's going to be interesting to watch, but problem is we don't have the funds to trade it here. So because obviously it requires quite a big portfolio, even if we trade it in options. Considering the premiums, and with options, the problem is obviously the time factor. So if we look at the NDX, we can see that even for 0-day options, you need a small fortune to play them. Even just selling, for example, a 19.7 cash secured put, the margin impact is insane. So yeah, there we are a little bit further away from doing that. And yeah, so anyway, we'll call it a day here. So I hope you were able to take something away. I recommend, if you disagree with some of my labeling, or if you just want to dig deeper into some of the ideas that I shared, grab the book or look it up online for free. Look up the chapter that is about guidelines. So chapter 2, guidelines of wave formations, and verify the different patterns yourself to see what's the most likely valid pattern right now. And then maybe or hopefully it helps you with your trading decisions. Thankfully, on one hand, I'm always regretting that we don't have spare capital to deploy right now. On the other hand, in situations like this, I'm actually happy about it because I don't have to worry about if I come to a 100% conclusion or not, because right now we anyway don't have, or right now our funds are anyway tied up. Thanks for stopping by. I wish you all a pleasant rest of the day, and don't forget to visit again tomorrow for another episode of Daily Market Mastery. Till then, bye-bye.